Have you ever laid awake at night, staring at the ceiling, wondering about the number? Not the numbers on a clock, but the number that defines your freedom. We all work, we all strive, and we all dream of a day when we can step back from the grind. A day when we can say we have enough. But what does enough actually look like? Is it a vague mountain of gold? Or is it a specific, calculated target? There is a profound peace that comes from knowing exactly where the finish line is. It turns the anxiety of the unknown into a map for the journey. Today, we are going to explore a strategy that has been used by millions to turn that vague dream of retirement into a mathematical certainty. We are going to talk about the most powerful investment vehicle in the world and a simple rule that can make your money last forever. Welcome to the Wealth Up Hub, where visionary mindsets turn into real wealth actions. Your future self thanks you. To understand this journey, we first need to look at the vehicle we will use to travel. In the world of finance, there is an acronym that stands tall above the rest. The S&P 500, often referred to as the SPY, based on its ticker symbol SPY. This is not just a stock. It is a collection of the 500 largest, most dominant companies in the United States. Think of names like Apple, Google, Microsoft, and Amazon. When you invest in an ETF, or exchange-traded fund, that tracks the S&P 500, you are not betting on a single horse to win the race. You are betting on the entire track. You are buying a slice of the global economy's engine. Historically, over decades, this index has provided an average return of around 10% per year. It is the gold standard for a reason. It offers a balance of growth and stability that is hard to beat. It is the primary tool for building what investors call a nest egg, your sanctuary of savings. But having the right investment is only half the battle. The other half is knowing when you can stop. This brings us to a concept known as the 4% rule. In the mid-90s, a financial researcher named William Bengen conducted a famous study. He looked at decades of market history, through booms and busts, wars and peace. He wanted to answer one question. How much money can a retiree withdraw from their portfolio each year without ever running out? The answer he found was 4%. The study showed that if you invest in a diversified portfolio, like the S&P 500, you can withdraw 4% of your total investment in the first year of retirement and then adjust that amount for inflation every year after that. Because the market historically grows faster than 4%, your money continues to work for you. It creates a snowball effect. Even as you withdraw money to live on, the remaining capital continues to grow, replenishing the pot. It is like a fruit tree that regrows its fruit faster than you can pick it. So, how do we use this rule to find your number? The math is elegantly simple. You need to accumulate a nest egg that is 25 times your annual expenses. Take a moment to think about how much money you need to live comfortably for 1 year. Include your housing, your food, your travel, and your joys. Once you have that number, multiply it by 25. That is your target. That is your finish line. For example, if you need $40,000 a year to live the life you want, your target is $1 million. If you need more, the target moves. If you can live on less, the finish line gets closer. This might sound like a daunting figure, a mountain too high to climb. But remember the power of compound interest. You do not need to save that entire amount from your salary alone. You simply need to start. By investing consistently in the S&P 500, allowing your dividends to reinvest, and letting time do the heavy lifting, your money begins to multiply on its own. The first million is the hardest, but the math is on your side. As we move toward the end of this reflection, let's distill these concepts into a clear path forward for your financial independence. First, identify your annual expenses to understand exactly how much it costs to fund your lifestyle. Second, calculate your freedom number by multiplying your annual expenses by 25. Third, utilize the S&P 500 ETF as your primary vehicle to achieve broad market growth and stability. Fourth, apply the 4% rule once you retire to ensure your nest egg lasts for 30 years or more, creating a sustainable cycle of wealth. Remember, fortune may come from things beyond our control, but what is in our control is the action we take today. So if you found this video helpful, Don't forget to like, subscribe, and share. Because like and subscribe are in your hands. Thanks for watching. I'll see you in the next one. The Wealth Up Hub, level up your wealth.